Hey everyone, this is Mallory Flowers on behalf of Jennifer Shelton and Associates, and we are coming to you live from Washington, D.C., and welcome to our Webinar Wednesday series. Our webinars are held every Wednesday in 2018 at 12 p.m. and 12:30 p.m. Eastern Time, and our speakers range from accountants to attorneys and other industry professionals. The full schedule for the rest of the year is on our website underneath the Webinar tab. In the interest of time, we do not take questions, and our speakers' contact info is posted on the last slide. So if you have any questions, please contact the speaker directly. The recordings are on our website under the Archived Webinar tab, as well as on our YouTube channel. All right, this is just a quick blurb about us. Jennifer Shelton Associates is based in downtown Washington, D.C., and we help both product and service companies with federal contracting. Our clients are domestic and foreign, defense contractors and civilian, and our services range from market analysis reports to contract vehicles, including the GSA schedule. We can also help you with proposal writing and post-award contract administration. More information about our services and upcoming events can be found on our website. All right, so we're going to go ahead and dig into today's presentation, which is cyber insurance requirements for federal contractors. And our speaker today is Andrew Beardall. You can learn more about his background on this slide. Thank you, Andrew, for joining us, and I'm going to go ahead and hand it over to you.
Certainly. Thank you so much. I really appreciate everybody's time today, and I want to welcome you to this webinar. My name is Andrew Beardall, and I'm the Chief Operating Officer of the Government Technology Insurance Company. We are a specialized insurance company that has developed programs just for government IT contractors. So consequently, we've had an awful lot of exposure, not just to cyber liability, but all of the different coverages that a government contractor may need. And today, what I'm going to be talking about is the new frontier in insurance that is cyber insurance. This is a relatively new development on the scene. It wasn't even around 10 years ago. But now, not only is it important to have, but it's becoming required under more and more contracts. So if you would move to the next slide, please. So let's talk about what cyber exposures are, because cyber itself is just a buzzword. It doesn't mean anything. It's not like general liability. General liability has been the same for 300 years. It means the same whether you come to our company or go to Hartford or Chubb or Philadelphia. It always will cover the same things. But cyber is very, very different. As there are no standards that have yet been set, what can cyber mean? Well, it's something different to every insurance carrier out here. So let's look at what some of the big exposures are. The biggest one that you always hear about is data breach. Data breach is when a malevolent actor steals information that would otherwise be private and puts it up on the dark web, sells it, does something nefarious with it. And we've seen multiple data breach cases occur over the course of the last few years. The next one is cyber extortion. Now, what is cyber extortion? That is when a hacker, some type of malicious actor, gets into your computer system, whether it is via phishing, whether it is through social engineering, whether it is brute force hacking. And they lock out your system or lock out access to your data and refuse to unlock it or threaten to erase it until you pay them a ransom of some kind or perform some other act that's against your own interests. Those are the sorts of things where you see the Bitcoin ransoms out there. Malicious software, well, it's exactly that. That's viruses. People understand in general what viruses are, but they've become more and more sophisticated. There were viruses that were in gas pumps that were skimming credit card numbers, so they didn't even need to put those physical skimmers on anymore. There are viruses everywhere trying to steal information. One of the most common vectors for that is a phishing email, a spam email, where someone clicks on a link and then all of a sudden everything that's on their computer is open to a third party thanks to a virus. Now, business interruption and physical damage, these are a little bit different, and they're much more of an analog to what someone would find on a property insurance policy. Business interruption and physical damage, think of it as the way a restaurant might treat a fire in the kitchen. If there's a fire, that restaurant can't have customers, can't serve food, there's actual damage that's occurred, and because of that, they lose income. Their business is interrupted. So a good property policy would have coverage for that. It would provide replacement revenue for them and cover the actual damages. So this is an analog in the IT world, in the computer world. The most famous example of physical damage caused by a virus is actually the Stuxnet virus that was used against Iran, where it made their nuclear centrifuges get off kilter, go off balance, and ended up damaging them. That is physical damage. Business interruption would be if your computers were locked out, if your data was stolen, if you as a company were unable to transact business because of a hacker's activities, and you lose out on revenue. All of those things are a cyber risk that's out there. And then finally, the last one, and this is tangential to the ones above it, are regulatory and compliance costs. If an event like any of these happens and somebody's information that should be kept private is otherwise compromised, then there are regulatory and compliance costs, both on the state and federal level, that have to be taken into account. And those can become very, very expensive. For example, the federal government requires that upon notice of a breach, that there has to be a forensic examination done of how did this breach occur. Those forensic examinations can get, $50,000, $75,000. And if it's not otherwise included in an insurance policy, that's something that the company is on the hook for, because under law they have to do that, along with other reporting expenses and the like. So if we can move to the next slide, please. So let's talk about a few examples. Data breach. We all know about what happened with Sony. And Sony had a bunch of emails released. Here's what we're doing for our movie plans. Here's what we actually think of some actors. Made things look terrible for them. The Office of Personnel Management. Hackers got their hands on information about hundreds of thousands of government employees. And the University of Maryland, my alma mater, I got notice that they were going to be providing me credit monitoring because the University of Maryland servers had been hacked and they had gotten my personal information. Now, cyber extortion, a little bit different. Nokia and HBO, two large companies, were both subject to it. HBO, it just happened last year when HBO was hacked and advanced copies of various television shows were stolen. And HBO was threatened that if they did not pay some amount in Bitcoin, that the hackers would release episodes of Games of Thrones early. And HBO certainly didn't want that, but they didn't pay the bill. They called the bluff. Malicious software, that happened with both Target and Yahoo. We've heard about both of those breaches. People think of them as data breaches, but they weren't. What happened with Target is someone actually got into their point-of-sale equipment there where the credit card transactions occurred and had uploaded a piece of software that would divert information about an individual's credit card to a third party. And then something similar happened with the Yahoo email breach, where that information was being sent out to a third party because of a virus in place. And while these have all happened to large companies, large entities, the danger of any of them for a small company is just as prevalent. Data breach, any company can have their information hacked, broken into. And whether or not you have information that belongs to your clients, to the government, you have information on your own employees. And certainly your own employees don't want their medical records, their identity information taken because of a flaw in your computer system. Cyber extortion. That happened to a restaurant here in Bethesda, Maryland, a little restaurant chain. They've got 4 restaurants and their computers were locked out. And as such, nobody could get chili at the place. It was a chili place called Hard Times Cafe for about a week until they were able to fix it. And malicious software, we've all seen viruses, especially if you have a teenager. You know all about viruses on your computer. If you could move on to the next one, please. So, what is cyber liability insurance? Much like any risk that's out there, folks have come up with a way to insure against these because there are tremendous costs that are associated with any type of a cyber breach, beyond just things like notification and credit monitoring, beyond the regulatory parts that we spoke of a moment ago. There can be issues such as reconstructing your lost data, the lost revenue on a business interruption, accessing people's credit cards that they may have on your website. All of those things cost money to repair. They all cost money to address any claim or lawsuit that might come your direction. So some very bright folks figured we're going to create cyber liability insurance. It is a new type of coverage. It's only about 8 or 10 years old. And the thing about it, like I said at the beginning, is it is not yet standardized. So there is a lot of variation between different carriers. And it's extremely important that you sit down with an insurance professional who understands cyber to properly customize a policy to your needs. And a very easy example of it is a lot of policies that just come off the shelf may have coverage for credit cards because so many people have their own e-marketplaces, electronic stores, online stores. But if your company isn't one that takes PCI, payment card information, well, you don't need that coverage. Why would you want to pay extra for it? And because there is no standard set yet, cyber insurance policies can range from extremely comprehensive to just junk, add-ons, something that they call cyber insurance just to satisfy a contract, but in the end doesn't give any actual protection or anything substantive. If we can move on to the next slide, please. So let's talk about what contracts are requiring. This is something new. Contracts traditionally from the government did not require any type of cyber insurance until last year. In 2017, the DoD came out with a notice that they are modifying the DFAR, the Defense Federal Acquisition Regulations, that require cyber insurance coverage as of January 1, 2018 on all new contracts or rebids that is compliant with the NIST framework, National Institute of Standards. Now, the National Institute of Standards created an entire division to deal with data security, and they have come out with what they're calling their framework over the course of the last few years. This framework is a prelude to an actual set of rules and standards, but it takes a long time to do that. Now, this is something that is constantly changing and being updated, but there are numerous provisions that deal specifically with a safety net, cybersecurity insurance. And as I said before, there's an awful lot of variation out there. Some carriers, like Philadelphia, like Hiscox, pay very close attention to this and have very good policies that will comply. Others are more lax and may or may not comply. One of the companies I just mentioned, Hiscox, updates their policy every time a NIST revision comes out. For us, in our business, that is our gold standard. That is who we utilize primarily for cyber insurance because we feel that they're the most comprehensive. Now, other government contracting entities, they are moving this direction. The way the wind is blowing is probably in the next 5 to 6 years, all government contracts, not just DoD and DFAR ones, are going to require cyber insurance. And that's because the risk of breaches is just becoming more and more common. A couple of weeks doesn't go by where you don't hear about the latest data breach. And you get yet another notice that your credit's going to be monitored or how to freeze your credit. The Equifax breach was a prime example. That breach hit over a third of the population of the United States. And then they went and tried to sell you LifeLock. Now, that was a terrible idea because do you know who LifeLock gets their credit information from? Equifax. Terrible choice, but a lot of people signed up on it because nobody dug deeper. And that's what I said a moment ago. You really have to work with an experienced professional who can assess the situation. And then prime contractors are moving more and more this direction as well. As you know, primes tend to pass through what's on the DFAR or on the FAR, but then add in their own bells and whistles, professional liability, crime coverage, and a lot of them are adding cyber coverage because if you as a company were to make an error that results in a cyber breach, they don't want to be left holding the bag. They want to know that you have a provision in place to protect them and protect their interests, because otherwise they're stuck with the costs. And it's easier for them to roll it down and force you as a subcontractor to get the appropriate insurance. Next slide, if you would, please. So, how do you protect your company? How do you deal with the idea of cyber insurance? Well, the first thing is, do you want insurance for it, or are you going to self-insure? What self-insure means is you're just going to roll the dice and take the risk, and if something happens, you know that that will come out of your pocket. Now, there are contracts that take that choice away from you. They mandate that you have insurance. And if that's the case, you've got to go to point 2 here. Do you want an off-the-rack policy, or do you want something customized? And that's where you have to work with someone who really knows what they're doing. Okay. For example, there are 4 different types of data breach vulnerabilities. The first one is what's called personal health information. Everyone's heard about that from HIPAA and the like. Personal health information is data about an employee's or another subject's health, medical well-being, and that's supposed to be kept private. If it is let loose out there into the world, that can compromise an individual's health, their health insurance, their privacy on things that really should not be out in the public, and it is actionable. The next one is what's called PII, personally identifiable information. That's names, addresses, social security numbers, phone numbers, birth dates, those things that you would need to open a bogus credit card or set up a fake loan, something along that line. Does your company store personally identifiable information? You probably do for your employees. You would need all that just to write them a paycheck. But do you do it for a third party? Do you do it as part of a contract? Information that the government may provide on veterans, on agency employees, on folks at NIH that are undergoing health testing. Do you have care, custody, and control of that information? Because if you do, you could potentially be liable. The third type is what's called confidential information. Confidential or proprietary information is not specific to a person, but rather to an entity. It could be a budget. It could be the formula to Coca-Cola. It is something that a company or entity wishes to be kept confidential and is entrusting you with it, but they could suffer damages if that was breached. And then the last one of the 4 is one that we've already spoken about, PCI, payment card information. Do you take credit cards on your website? Do you have an e-store, anything like that? So the first thing anyone should do when you're sitting down with an insurance professional to talk about cyber is look on those 4 different axes and say, where are we at risk? Where could there be a breach? And then the next part is you look at your contracts. What do your contracts require? Now, a good insurance agent will be able to take that and create a customized policy for you that addresses those needs, but doesn't have you pay for anything you don't need. And unfortunately, given that this is so new, you'll have a lot of insurance agents who just take the off-the-shelf thing, add it on, and say, poof, you have cyber. But you want to be sure that you're asking them about those individual risks. You want to be sure that you ask that insurance agent all those things from that earlier slide. Does this cover me for cyber extortion? Does it cover me for business interruption, malicious software? And if you want a list of about 20 more, I'm happy to provide it to you if you'd like to contact me after this, because there was only so much room in this PowerPoint, and I don't think anybody wanted to read 20 pages of risks. And then the last question that you want to explore is, do you want a shared limit or a dedicated policy? Let me take a moment to explain what that is. There are a lot of carriers who sell professional liability policies. That is your policy that protects your company against the negligence of one of your employees where a third party, usually a client, suffers some type of damage. And what they're doing is, to get you covered for cyber, they're giving you a little add-on to that. Maybe it covers data breach, maybe it covers extortion, who knows? That goes to those earlier questions you have to ask. But they do it as an add-on rather than its own policy. Now, there are positives and negatives to that. The biggest positive is it costs less to do it that way. But the biggest negative is it's all drawing out of the same bucket of money. So if you have $1 million limit and there's a professional or a cyber claim, then it will suck away potential space for any type of professional liability claim. And given that it is just an add-on, they tend to be much less comprehensive. These are just little riders that help people get that sheet of paper that says I have cyber insurance, but do not necessarily provide the thorough level of protection that you need. Now, it is very different from carrier to carrier. Some of them are better than others. There are some shared policies that can be very comprehensive, but those are the questions you have to ask your insurance professional and let them help you work through to make sure that you have a policy that addresses your risks, that fulfills your compliance needs, and provides you enough of a safety net that you are comfortable moving forward. If we can move to the next one, please. So that ties up the general idea of how to put together cyber. The core of the entire cyber insurance world is really taking a look into what you have, what your risks are, and a good insurance professional will be able to help guide you through that, and then decide what risk do you want to take, and then what risk do you want to insure against. Now, my information is right there on this slide, my email address and phone number. Please feel free to reach out, and I or someone on my team will be happy to answer any questions. We would certainly appreciate the opportunity to earn your business if it is something that we can help you out on specifically. And I hope this has been helpful for everyone. And again, please reach out with any questions. And I will pass the torch back to you now.
Thank you so much, Andrew. That was a lot of great information, and thank you for sharing your time with us today, and thank you for everybody who joined us. Like he said, if you have any questions, reach out to him with the contact information you see on your screen. At 12:30, we are covering how to develop winning federal grant proposals. So join us then. Thank you, everybody.
Bye now. Thank you.